Okay, great. Well, this has been really fun listening to the other coaches present because none of us have collaborated, and it's interesting to see where we agree and where we disagree, and where we mostly tend to agree. So a number of the items in my chart I'll probably just zip through quickly because very similar predictions. The first thing I did before looking and predicting or even considering 2012 was to look at 2011. And it's too bad Mike Rixey isn't here because we've talked about the 2011 market a lot lately because of the volatile market swings. We've seen big market swings up and down. It's been a very difficult market to swing trade, and Mike's experienced that as well as I have with some of our swing trades with options that we've been doing, particularly in the latter half of the year. The beginning of the year was a little easier, as you can see from the next chart that I'll show you. But basically, we've seen lots of frequent reversals, and the magnitude of these reversals have been quite large. This has provided a great opportunity for day trading. So the day trading side of our trade plans have actually done quite well. The swing trades that rely on trades to complete in a matter of days to a week or two have been less successful towards the end of the year because of these market swings. The other coaches have covered the uncertainty, the reason for this. It's an election year, the Eurozone debt crisis, our national debt we haven't really resolved yet. The housing market this past year, we saw housing pick up a little bit, but prices still down. GDP, again, it's been picking up a little bit, but we're still looking forward to a more healthy GDP growth. All of these things, all of these issues, and of course some of the issues that TJ brought up, some of the world events, all provided uncertainty. And this has created a 2011 that has seen great swings, great reversals. So the next chart I have is a chart of the S&P 500 index, and this is generally regarded as the best single gauge of the U.S. large cap equities market. And this is what we saw for 2011. It started out just about exact. In fact, it ended within a couple of ticks exactly where it started out, which is really quite amazing. When you look at these swings, we saw right off the bat an increase of almost 7%, then a drop of 7%, a gain of 9%, a drop of 8%, up almost 8 again, down almost 19%, and then look what happened in the August-September timeframe. This provided a very interesting time for swing trading, which is the primary trading that I do. In the late summer, we saw swings up and down 10% just from week to week. And then towards the end of the year, November, December, pretty much stayed the same. I mean, right here when November started, it ended there in December, but we saw, again, large swings. There was never any clear direction for this market. We saw about 18 reversals lasting an average of about 13 trading days. 16 of these reversals were greater than 7%. And when you consider that a 10% move in the market is defined as a correction, we saw about 4 or 5 market corrections this year based on these swings. But looking at the overall trend of the market, it went absolutely nowhere. This next chart, let's see what's happened here. Here we go. Here are the actual prices for those swings that I put on the previous chart. And again, this provides a very interesting view of what happened. Notice the 2011 open, the very first tick on January 3rd. Look at the very last closing tick on 2011 December 30th. 1257.62, 1257.60. Unbelievable. It closed, it pinned right where it started. Yet looking at the average number of days, for each of these swings, it averaged about 19 calendar days and about 13 actual trading days. So very volatile market. And there are the gains that I showed on the previous chart for a net of 0. So again, very interesting market to trade this year, and we saw lots of swings and lots of reversals. And this made a very volatile market. I haven't really seen a market like this in a number of years. We've seen markets where it's gone up, it's gone down, we've seen some violent moves, but this back and forth with the magnitude and the number of reversals is really quite unusual. Picking up from where I left off in the last chart, this closing right here at the end of 2011, you can see we've been going pretty much straight up. and from the last swing low to where we are now, up 10%. Here's where I have to agree with Will. We are a bit overextended right now, and this is another 10% move in the market. But I liked Will's chart showing the volume dropping off. I think that's exactly right on. I'm right now expecting a market turnaround, and you can see. I think that last candle is actually today, maybe yesterday. But anyway, you can see the market is starting to turn around. Who knows? That may turn to be another reversal point. So, what am I looking at for 2012? Again, it's fun to predict. I don't rely on predictions. I totally agree with Will. I trade the charts, but it's fun to take a look and prognosticate and see where we end up, at the end of the year. Last year, if any of you were on this call, I made absolutely no predictions. I said I don't make predictions. I just trade the charts, and I hold that same same position this year. But I decided to throw an outlook out there since that's what makes it a little fun. I think it's more of the same. I think we're going to see volatile markets and big swings again. I don't see that anything has changed. Nothing is really different now than it was a year ago. It's been an election year for 2 years, so this is the second of 2 election years, and in the U.S. this election cycle seems to be going on forever. The Eurozone, the debt crisis did not get resolved. Middle East continued unrest. National debt, we still haven't addressed it. Housing sales are up thanks to investors. Prices are down, and market predictors are expecting housing prices to continue to go down, although sales are going up because investors are stepping in, seeing some good deals. GDP is starting to turn around, so that's good. But again, I see more of the same. Echoing what Will said, I see stocks down for the near term, but I'll go on a limb and say that in the long term, meaning by the end of the year, they may be a little bit up. I think they're actually be up, and I say that for a couple of reasons. With the market not going anywhere for a whole year, there's been a lot of pent-up demand. Most of the U.S. corporations have they've laid off a number of people over the last 3 years, and that layoff cycle is kind of completed now, and they're operating lean and mean. The PE ratios are low. We're starting to see some health return in the economy, and a lot of investors and a lot of mutual funds have seen cash put on the sidelines. The cash has been going into bonds. That's why bonds have been driven way up. We've seen the long bond, up, or I should say down, with an interest rate of 3%. It can't sustain 3% in the long term. Those rates are going to have to eventually go up because the GDP is starting to pick up. Because we've been consolidating for 3 years. The money has gone to the safe investments, mostly U.S. Treasuries. But again, the discussion that Jamestown and QE3 I thought was very interesting. If there's another QE3, another quantitative easing, the Fed's going to be buying more bonds. That again will, could drive interest rates down a little bit. But how much further down can they go? How much further up can bonds go in price? I just think that investors may be seeing the end of the run in bonds, and with the pent-up demand in stocks, I could see later in the year, possibly maybe even the beginning of 2013, a major shift from the bonds to the stocks. Again, it's just my prediction or thoughts. This may not happen right away, and again, I expect stocks probably to go down, at least in the short term, as Will's chart showed. My plan, don't rely on long-term trends. Don't rely on predictions. For me, I'm going to be continuing swing trading. For me, I find swing trading to be a little less, well, not a little less, but considerably less stressful than day trading. A little more time to place my trades and to consider the direction that I'm going in. But this year I'm going to be limiting picking the direction for most of my my trades because of the wild swings we've seen, because of the unpredictable nature and the quick turnaround. I'm going to be a little more picky picking my swing trades. I want to be have great confidence. I think the SST provides a great system for providing that confidence. I'm using options more this year to supplement my swing trades with premium selling. Again, because that allows me to be wrong part of the time and still come out even or even with a little bit of profit with the premium selling. So if I'm placing a trade, I may sell a little premium outside the pricing. If I'm going long, I may sell a call outside the money. So that's my swing trading plan. Day trading, I really like Will's minimalist trader approach. I'm continuing with that. I'm going to stick with the most liquid futures and forex markets, mostly the futures markets, though. And with forex, I tend to like the currency futures over the straight forex. I know that you can't trade. There's a little bit of difference, but I do like the regulated exchanges for that. I like limiting my markets and time frames. A couple of the other coaches brought this up as well. Trade only those markets and time frames that are liquid in the time frame where things move, and limit that to the hour or half hour or hour and a half, to just the amount of time where there's really the greatest opportunity for movement. That way you don't end up in that dead midday hour, as James mentioned. You don't want your time frame to extend into a period where we see little movement. So I like Will's minimalist approach when it comes to my day trading, limiting my markets and time frames, sticking mostly with the futures markets. And I believe, yep, that's my my thoughts for this year.
Great, thanks, Bob. Really do appreciate that. So let's go ahead and hand it off to our last predictor, our last psychic of the presentation. That would be Ron. So Ron, I'll hand it off to you as well.